Hello everyone, welcome to our presentation. We are Team Venus including Quý, Sơn, Hưng, and Hoa. This is the debriefing report video for performance analysis and simulation course. We are required to use CAPSIM, which is a business simulation program that enables us to make business decisions. Our team's route to decisions and results will be presented in this video. Now, let's look at the content. First, we will begin with demonstrating and analyzing route to result. Then we will consider our strategy and evaluate our result, followed by lessons learned from this round. Finally, we will finish up with our planned decision for the next rounds. Regarding the result of round 2, let's have a look at the balance scorecard. As you can see, our performance in this round is quite remarkable with respect to three perspectives: financial, internal business process, and learning and growth. We managed to achieve good scores in those domains. Customer is the only category that we have to pay more attention to due to its relatively low score. In general, our balance scorecard result is significantly improved as compared to round 1 in most of the indicators, especially for profit, contribution margin, customer buy-in criteria, customer awareness, and customer accessibility. Additionally, we have applied the HR module in round 2. The results are visible, which is the maximum score in employee turnover rate and employee productivity. Let's continue with our vertical analysis of round 2, with its past performance in terms of some key performance indicators. Overall, all of our KPIs have been better off compared to round 1. The most significant point that we would like to mention is that our profit in round 2 increased considerably from $1 million to $8 million, which is 8 times higher than the last round. This can be accounted for by the increase in market share, sales, and contribution margin. The result of these improvements is that we have achieved several better financial ratios, such as return on assets, return on sales, and return on equity. Also, our leverage ratio also decreased to 1.7, which means that our company has a lower level of risk. In the next part, we will provide a horizontal comparisons of Andrews with other competitors in the industry. As can be seen, our company is quite a high performer in the industry. Clearly, our sales and CM makes up the highest figures, being $154 million and 36% respectively. As a result, our profit also is among the top in the industry. Moreover, other financial statistics are also better than most of the competitors. The strategy that we use for the past rounds is broad differentiation, which means that we implement the same approach in every segment with excellent design, high awareness, and easy accessibility. We focus on R&D to keep pace with the market so that price is set above average, and we also expand our capacity. In more detail, let's take a look at our perceptual map. You can see that we have products in all 5 segments, and our positioning is pretty much close to the ideal spot. Other than that, we also introduce new products. We have Aura in the high-end segment, which is developed in round 1 and introduced in round 2. Alpha in the size segment is also developed in round 2. The reasons for choosing this segment for our new product is that we see competitors' products, Buddy and Egg, seem to lead the segment. Size segment has also the high roll rate, which is 18.6%. Moreover, the reliability is insignificant according to the customer buy-in criteria. We do not have to adjust its MTBF so much, so that this could be the less cost for the long-term investment. However, we came across some unexpected findings with our result. In the low-end segment, with our product Accurate in particular, there is a significant increase in the units sold by approximately 1,000 units, and the market share also increases by 6% compared to the previous round. The reason for this is that we conduct more accurate forecasting techniques as compared to round 1, so that we avoid stockout which happened in the previous round. Moreover, we invest more in sales and promotion budget in order to boost the customer awareness and customer accessibility, which would consequently lead to an increase in customer survey score. On the contrary, our high-end segment, product Adam in this case, performed not too well. Adam sales dropped drastically in round 2 by 240 units, which accounted for half of the sale in round 1, and the market share also decreased by 9%. The reason is that the late revision date, which is only half a month to sell, so that Adam drifted out to the rear of the segment fine cut, and thus has a lower demand. Moreover, there is an error in sales forecast which led to stockout of the Adam product. The last step in our evaluation is that we need to ask ourselves if we have achieved our goals by these operating decisions or not. The answer is yes, but we need a more elaborate explanation. Taking a look at this table, you can see that we have 4 targeted goals that we already achieved. The first one is to maintain our contribution margin at an acceptable level. This can be explained by the decrease in labor costs because of our automation level investment that we have made in round 1. The second goal that we have also achieved is to meet the customer buy-in criteria related to our product differentiation strategy. We focus on R&D by getting closer to the ideal spot and deliver the most advanced sensor. The third goal is to increase our awareness and accessibility by spending a lot of money on promotion and sales budget, and we achieve this goal successfully as well. As the result of the all above goals, we have achieved our overall profitability with higher sales and less cost, in other words, we have a higher contribution margin. So after round 2, we have drawn 5 lessons worth being taken into account. The first is that we should focus on the revision date because it has a huge impact on the age and units sold of our product. For example, in the high-end segment, as we focus too much on the criteria, as the result, Adam product has only half a month to sell, and our product has dropped from the 2nd place to the 5th place. Our second lesson is to consider competitor strategies by looking at the movement of the products in the perceptual map in round 1. To further explain, we predicted that our competitor would move away from several segment structure sizes, and we decided to issue the new sensors in that segment. The result is that our prediction is correct. Our third lesson is that promotion and sale budgets are not the ultimate tools to boost sales. There are the means to increase your sales as well, maybe via your pricing meeting criteria or by the precise sales forecast. The fourth lesson is the sales forecasting needs to be more accurate to avoid inventory carrying costs and stockout costs, because that the customer survey score is not fully reliable. The final lesson is that investing in HR module can improve employee turnover rate and employee productivity, and it can help to decrease in costs such as recruiting costs and labor costs. Regarding our decision for next round, which is round 3, we will continue to focus on R&D because our strategy is still broad differentiation. New products will be introduced to other segments as well. We will still conduct accurate sales forecasts based on our expected market shares because it has worked reliably in the previous round. We still maintain plant utilization within the ideal range and utilize all kinds of sources to finance decisions. Moreover, we will still maintain budget for the HR module. Besides these decisions, we will take advantage of the TQM decision in the next round to reduce our revision date and improve our sales performance. This is the end of our presentation. If you have any further questions, please let us know by giving your comments below, and we will be happy to answer them. Thank you for your listening.